So I make use of one of my strongest concepts to make $3,000 on one particular trade on Nasdaq. And I do share the analysis, the before of this particular trade on my Twitter, Telegram, as well as the precise entry, stop loss, and take profit with my PIF community. And the name of the concept is DLSC, that's Direction, Liquidity, Structure, and Confluences. You see, this concept teaches you how to have a solid directional bias, like the easiest way and the most effective way, and how to actually frame the most effective liquidity in the market, as well as how to support the valid structure at the right time of the day, and then how to use other confluences to have a good setup. That's DLSC. And then this, as you can see, is exactly what transpired in the chart. We are going to go there in a bit. This is like previous day's high. This is liquidity. And then after the liquidity, we have structure. And then that was how it came about, the trade that yielded 2.6 risk to reward ratio, resulting in $3,000 in payout. And I didn't catch this setup alone. I called the buyers on Twitter, on Telegram, as well as on my community. So let's dive into this video, and I'm going to take you through how I trade the LSC concept. So let's dive in.
The first thing I do is understanding the directional bias. And my directional bias on Nasdaq was bullish since last month. And all these levels were called, especially if you are in my Telegram community, right from this level plus this level, everything was called live on my Telegram. Okay. So for the breakdown of this trade that I took yesterday, I made $3,000. You see, this was the week open, and this was previous week high, as well as Friday's high. So what happened was this. I already understand that the direction is bullish, but price have to, make some correction. Even though we are in a bullish market, we must expect some correction because price didn't go up or down in straight line. So that correction, that's the retracement, has to come in a logical level. It's not all the time you can expect retracement. So the first thing I consider was this. It is new week, and I always come into a fresh week with this in mind. Number one thing is the weekly profile of the far up tree. In a bullish market, it is ideally to see Monday, setting the tune, either accumulating or, making the direction clear, ranging or stuff like that. And then Tuesday to form the law of the week. That's 75% of the time. If you backtested, you realize Tuesday form the law of the week 75% of the time. So the far of three is this. If I'm bullish, what I'm expecting is, okay, let's say this is Monday. So Monday should do something like this, and Tuesday should trade below Monday's low, forming the law of the week, and then we start getting reversal, and price should continue soaring high from that. Like Tuesday forming law of the week, and price should continue going up. So this is what I always have coming into the week, especially a week like this, that a gap was formed last week between Friday and Wednesday. We have this gap, right? And then opening this week, we saw price forge above previous week high, previous day's high. And this is one of the important liquidity. So number one thing, we understood the directional bias. And the number two thing is we have seen liquidity taken. Thereby, we need to expect to see price dropping and selling before it continue buying. And that's exactly what happened. So price took this high, this buy side liquidity. So this is like to say, this is the open, and then this is the manipulation. Price have to manipulate a certain important liquidity, which was the previous week as well as previous day's high, this high. So as price took this previous day's high, my target was this. My target was this Fair Baluga. I don't know for sure how differ price can retrace, but what I know for certain is price is definitely going to make that correction. So that's what I have confidence in. price is making this correction. And logically, since taking this high, this previous days as well as previous this week high, so we are anticipating that power of three. This should be like accumulation, manipulation, and then we see distribution like before the actual buy continue. So this fair value gap, this imbalance is my internal draw on liquidity. So after this, I went to 4-hour time frame. I want to 4-hour time frame, and all I want to see. So after this, I went to 4-hour time frame, and all I want to see on 4-hour is rejection. And I saw these two candles rejecting up of this previous day's high. So that being said, I went to 30-minute time frame to take the counter trade sell, and this was the trade on the 30-minute time frame. And you can see on 30-minute time frame, we have after the closure of the last 4-hour candle, we have this shift in market structure on the 30-minute time frame. And then this SMT divergence is between SP 500 and NASDAQ. You can see NASDAQ taking high while S&P failing to take out that high. So this SMT divergence is a very, very strong confluence telling you that price is eager to sell, with SP 500 being the weakest, as well as NASDAQ being like among the two. NASDAQ is somehow strong, but I take the entry on NASDAQ instead of SP 500. And then this SMT divergence is the final confluence. So liquidity been taken, and then this is the draw liquidity below the sell side. This is structure, and you can see the time this structure formed. It formed like during the lunch hour, but this fair value gap was created around 8 a.m. New York local time. And then this is our 8:30, and you can see the open price. And just the way we have weekly power of three, we also have the power of three profile, the daily power of three profile. That is to say, if we are to sell in a day, that's to say, if we are selling in that particular day, we will have to see price ideally trading above the 8:30 open, and then having a setup forming above the 8:30 open is high probable and more ideal to see that. And that's exactly what happened. So you see, this is the 8:30 open, and then price drops below that 8:30 open. And you can see our entry was just a bit higher above the 8:30 open. So this is like exactly what happened here. This is like the accumulation and the manipulation trading, the entry forming above the 8:30 open, while price mitigating this fair value gap, finding its way all the way back to this breaker block. But I do execute inside this fair value gap. And the entry was here, while the target was this sell side. And this is the level I use as my break-even point, because after price came back here for the first time and the second time, it retested and panned its way back into our entry, and then price then mitigated and start dropping lower. So when price broke this, there is no any reason for us to see price coming back here, except if it is invalidating this point. And this is exactly what I shared with my signal community. I told them that price have no reason to logically come back here again, because it has tested the level multiple times. And then we saw this break, price broke this gap, and then we saw price retracing back into this level, and it drops the 2.66 risk to reward ratio. It drops beyond that. And then this is in a nutshell the trade idea and how I come about taking this trade that yielded $3,000 for me, as well as my followers on Twitter, my subscribers on Telegram, and my inner cycle BIV community as well. I hope you learn one or two from this video, and if you want more video like this, make sure you subscribe, comment in the comment section, and until we meet in the next